Let's talk buy the dip, shall we? Everyone's favorite trading strategy. We're going to dig in a little deeper today and talk a little bit about the exact criteria you want to look for if you are the type of trader that likes to buy the dip. Whether it's a long-term strategy or a swing type of idea, or whether you're on an intraday time frame, guys, what do we look for when we want to buy the dip?
So, like, obviously, when you're talking like the quick day trades and some of what we do, you're looking off of levels and that. But I think in this sort of market correction, bear market pullback, whatever you want to categorize it, I think you're thinking a little bit differently here because there's a few things you want to consider, right? Like, we're raising rates this year, Fed's going to trim the balance sheet, and we got a question actually the last couple of days about this stock in particular, Adobe, and that's why I want to bring it up. Is you're also getting multiple contractions. So you want to start to consider not just when things reach levels, and I'm going to go back and show you, pandemic highs, pre-pandemic highs, I should say, at about 385 in Adobe, and then breaking out of that level, and then found support initially after that break at about 417. So when things got out of hand, the Fed dropped the rates and started just buying everything they could find, and the market started pumping, its support levels was around that $400. So when you get to this level, that's trigger number one. Are you getting to that kind of a significant historical level? But the other question you should be asking yourself here is, okay, look, I get it, Adobe, solid company, good products. Now they're catching downgrades right now, and sometimes that can be an indication of some bottoms for other reasons. But you got to start thinking about what do they look like on a cost basis? Because their 4P is now below 30, and what that tells me is as it gets cheaper, but not necessarily in that sweet target zone, get that bad boy in the 20s, that you start nibbling in. And what that means is, quite frankly, in that kind of a market, you don't know where the bottom is going to be. So you're not trying to, long term, you're not trying to call a bottom if you're trying to pick up a decent name or a quality name. No, you're just trying to find a good starting entry point. And I think that's what happens here. The first level of support at this 400 type of a thing, you get under that 30 PE, you understand that your real target zone, if it gets anywhere near like a 20, low 20s or high teens, you're going to love it. So you leave yourself some room, whether it's 10%, 20%, what your risk parameters are. But the key is if you're going long term, you're not buying, let's say at 420 or 450 to get out at 400. You're buying to hold for the longer term, and this is your starting point.
Yeah, no, great. I mean, look, I was going to say the same type of thing about nibbling in, and I think that's a great strategy. But I'm going to use something that's maybe even more basic than that. And honestly, what the topic is what's the best criteria to work for? I think value and nibbling in and buying names that are of higher quality is the right thing. But how about this? Just as simply put, do you know what the company does? There's a lot of these companies out there like a Teladoc that I have right here. Look at this tank from $310 down to $40 or $50. Would you buy this dip? It's a nice move back up, right? Here it goes right back up to the upside, about to take out the 50 period. So if you're just looking at this, you might say, oh, this is a great name to buy. But is it? Do you understand what Teladoc does? Is it going to work in the new environment? Do you really expect it to go back up to 300 in a non-COVID environment? Do you understand what the company does? And I think another example for that could be Peloton. Do your research, do some due diligence. Like, is Peloton going to get bought out? Forget about the move. Oh no, and here we go. Now the chart won't load, but here it comes. Look at this move, man, from 150 down to 20 bucks. Great pickup, right? Maybe. Are they selling bikes still? How is that subscription model working? Do you understand sort of catalysts that will get that back to the upside? Like, for example, Nike, right? As opposed to Teladoc, I think all of us can sit here and say, we understand the business model behind what Nike's trying to do. And maybe we understand why they've been hit here. Supply chain woes, the dealings in China, COVID running through China right now again. So for me, in an world that opens back up, Nike, I understand the business and I understand where they can get their profits from, right? I may not be an analyst or I don't know exactly everything you need to know about Nike, but that's not the point, I think you got to find names where you can catch a catalyst that you understand. Don't read but don't say, I'm going to buy ARK because it's all the way down. If you don't believe in the names that are held in some of these ETFs, then don't buy them. Understand the stock that you're getting involved invested in, and therefore you'll feel better. Because if Nike drops, at least I'll know why, and I'll have some areas of concern on the charts and things like that. A stock like Teladoc or UiPath or Palantir or any of these names, a SoFi that's been hit all the way down, what are the catalysts to go back up? So for me, a good criteria to buy some of these dips, you know, understand the name and understand what's going to treat this as your next winning trade.
Regardless of your time frame, you have to have a plan, guys. Make sure you have a plan and control your risk and understand that ranges always can expand. We've learned that, if not anything, this year. So there we go. A few great tips on how to buy the dip.